Do you want to get 100% win rate trading strategy? Well, you want to hear about this thing called DCA and greed bot trading. All right. So before I start, welcome to Geek Investor, your resource for all things crypto. Take note, this is not financial advice. All right. Please do your own research and only invest what you can afford to lose. I'm also not sponsored to do this video, and I'm just sharing my experiences. And by the way, join our free Telegram at the video description below. All right, the link is over here. So what is DCA, in case you don't know what's that, or what is grid trading or grid bot trading, which is a very popular thing right now on most exchanges. All right, before I start, you can do this on any pair, any trading pair. It can be crypto, can be forex, whatever you choose to do. But I'm actually a day trader, so you can do it on many different time frames, and you can choose which way you prefer. But I just want to share you a little bit of this because I wish someone would have shared with me this when I first started learning how to trade forex many years ago, because the one that taught me did not tell me there's such a thing called DCA. All right, basically DCA is called dollar cost averaging. All right, so what happened here is that, let's say for example, let's say we open a trade here. All right, we open a trade here, and for information, I trade on futures, so that means I can do a long position or a short position. All right, short position means that I make money when the price goes down. Long position means I want the price to go up, then I make money. So in this case, it looks like it's a very good time to do a short position. All right, so when you do a DCA, what happened is that, let's say if you bought, let's say you bought at this area. All right, you want the price to go up, but instead of going up, it went down. Okay, because you only make money when you go up on a long position. So what happened is that if you calculate the price from here to here, all right, it's about 13%, because this is on a 4-hour time frame. Normally, the higher time frame, the more percentage difference there is in cryptocurrencies, which is pretty normal. Unlike forex, which is like only a few percent. Okay, so basically, what happened here? You want to set, for myself personally, it depends on your trading risk. All right, so what you can do, you can set your own DCA. So let's say you traded for a few hours here, and you can set maybe a DCA of maybe 5%. So let's say 5%. All right, it's around here. All right, so I will put my next long position over here. So if I do a order here, let's say $100 here, and then I'll do another $100 here, so I got $200, and basically I'm buying more cryptocurrency as the price continues to go down. Why do you want to do this? Because when you do this, what happens is that when, let's say you buy, the first order was here and the second order is here, what you do is you average out your trading position. So what happens is that when you do this, when you buy the second one, your trading position will jump down to half, which is here. So basically you need to only cross here, then you make money. All right, I actually learned about this actually not from any YouTube video. I learned this purely from learning how to do bot trading. Then I was really wondering, what is this DCA all about? So before you apply DCA, I'll share with you how I trade, so you can use this strategy on your own, using your own risk as well. So before I start, normally I recommend people to use two indicators. I use the EMA 200, so sorry, and the pivot point super trend. I talk about that on my YouTube channel. You can check it out as well. So basically, the super trend is this one. It tells you when to sell and tells you when to buy. And this red line that you see here, that is the EMA 200. So these are my personal rules that normally I use when I manually trade. All right, when I manually trade, I always follow. All right, always follow. All right, follow the EMA 200 direction. Okay, always follow the EMA 200 direction. So at this point on moment when I'm recording this video at a high time frame, all right, which is 4-hour time frame, all right, you'll notice the EMA, the price is above the EMA 200. So I'm looking for a buy position. I'm looking for this buy signal, okay, before I actually do a long position. So when it's above, I'll look for a long position. When it's below the line, red line, I'll look for a short position. All right, so like for example, all this I'll look for a short position. All right, because I'm a day trader, all right, that means every candle you see here is actually 4 hours. This is something many YouTube videos don't talk about. You know that every candle here is 4 hours, so you take a very long time for you to see this signal coming out. All right, like take forever. All right, imagine from this signal actually started on the 15th of February. Today, as I record, is 16. So this was yesterday signal. So when I day trade, I normally day trade in either 1 minute or 3 minute time frame. If you are a beginner, maybe try 5 minutes. Because the more time frame there is, the more how to say, the more accurate you need to be in a sense. So why I do that is in the 4 time frame I see is a uptrend. So now so what I do is I only in my day trade I only look for long position. All right, so looking for long. So I go back to my normal trading time frame. So what I'm looking now is only looking for buy positions. All right, so basically what happened here is that I only buy when the price action is above the EMA 200. All right, as you can see over here. Okay, so depends on your personal strategy. Sometimes all this super trend or whatever trend that tells you to buy can be not accurate at all. For example, let's say if I bought over here, the super trend says buy and it's very close to my EMA line. All right, you can choose to take the trade or not to take the trade. It's up to you. But obviously, if you took the trade, you will know what happened. It actually went down. But one thing good about the DCA, right? Let's say, for example, we took the trade, all right, on this line. Okay, let's imagine we took a trade on this line. Okay, so the price here is 0.25. All right, and I want to normally there's no such thing as the perfect indicator, by the way. So one thing good about DCA is that you can actually plan. All right, you can plan, all right, your own DCA. All right, how many times should you dollar cost average? It depends on individual, but normally, let's say your budget per trade is, let's say, $100. You do not want to spend $100 on this one trade. All right, you want to break it into maybe 3 sets. All right, so that means one trade I only trade $30, for example, and then the second trade I will trade $30, and then the third trade $30 within one trade. So in DCA, you do not trade 100% of your balance. You only use a certain amount of it, and the total trade here should not go over more than 10% of your total balance. All right, do not use more than 10% of total, because you can easily use up all your funds if you use DCA. So you do not want to use 100%. So let's say if your exchange has, let's say, $1,000, I only use 10%, which is $100 to do my one trade, okay, of DCA. I hope that explains clearly, as simple as I can explain. Okay, so so my first opening trade here will be $30, but then again we saw the price went down. So normally you will plan how much do you want to DCA for cryptocurrency, depending on which pair you choose. All right, normally a range from 1% to maybe 5% would be kind of safe, okay, to use. Okay, depending on current. How much do you determine when to DCA? Okay, so it really depends on the trend and the line that you see over here. So normally before I start trading, right, I normally will draw my trend lines. Okay, so I will draw my trend line, will draw something like that. All right, then draw something like this. So I roughly can guess maybe it should be going down, right? Based on what I'm seeing here, I will draw the trend line. So I'm waiting for it to go up. All right, maybe I will sell somewhere here. But anyway, the price went down, so it didn't go the direction that I want. All right, so how much did it went down? Because now we see this is very simple, but normally we see is like this. We don't know what's going to happen in the future, right? So what happened here is that normally, let's say based on my 5% or 1%, all right, for this particular pair, it seems like my DCA I'm comfortable with would be 1%. So if it goes a 1% down, I will do a DCA, all right, for example. So 1% is around here, okay? So I will buy around here. Okay, 1% is around here. Wait, let me see. 1% is around here. Yep. So roughly there. Okay. So that means I will buy another position over roughly here. right? I don't care what happens to the trade, but every 1% I will buy. So if it continues to go down further, let's say it continue to go down further another 1%, I will buy another 1%, all right, over here. That's my next line. Okay. So that's how DC is actually, if you look carefully, right, this is exactly like how grid bot actually works. All right. In some exchange, there's this thing called grid bot. So grid bot actually does the same thing. That's that this is the manual way of doing it. So when you do grid bot trading, this is actually what it does. It does actually it buys every level at certain percent. All right. So I set one level, my first level here, second level here, third level. So when you reach here, you will buy the same amount of coins that you buy. So let's say if you buy $30 worth of coins here, you will buy another $30 over here. Okay, and one thing good about this is that, as I said, I love to DC because it really takes away the stress where it's like, oh no, I actually bought something that it didn't go the way I want it to be. Obviously, you can see the future, we know it went up, but sometimes what happens is that because of this trend line, you think, oh no, it's gonna go down, gonna go down like crazy. All right. So what happened here is that if you DCA 1%, which is here, and you bought another $30, what happened is your average position, your new average position will be somewhere right in the middle of where in between these two, which is about 50%, all right, which is around here. Okay, so let me just change this color a bit. Change this to maybe yellow. Okay, so the yellow is your average line. Okay, if let's say imagine if the price even went further down here, and then you buy another $30, all right, $30 here, then you have spent around $90 in your trade. Your average position most likely will be roughly around maybe here. All right, if you went all the way down here. Okay, so what's so beneficial about this? All right, if you notice from here to here, why I do like this, because from here to here it only takes like 15 minutes. All right, and then for me to wait for it to be in profit is about 1 hour and 2 minutes. All right, so normally what most traders do, I see many videos do, but they don't talk a lot about this. They like to do this thing. They like to do this thing, what stop loss, your target is what. Okay, I personally don't like to do this. What risk, what ratio. In fact, sometimes I don't even use a stop loss. All right, if I'm manually trading it. All right, I don't like to do this. All right, because I prefer to DCA. So unlike traditional most videos you watch, they always tell you, oh, you need to do a 1:2 risk ratio, you set the stop loss here. The problem is what happens if you, let's say if you base on that logic of 1:2 ratio thing. Okay, so if you if you set this, you obviously already will be stock up over here. Okay, so that's why I don't like to use stop loss. When I do DCA trading, I normally don't set any stop loss. If I'm doing it manually, I will just keep on buying down in hopes that later on it will go up, which what we see over here lah. Okay, so what happened is that instead of setting a 1:2 risk ratio, I set a fixed profit target. All right, so normally my fixed profit target is around 0.5% all the way to 1%, depending on which pair you choose. Right, this particular pair you're looking at, H bar, is not a very good example because the percentage gain is not a lot. Okay, but if I set, let's say my rules is 0.5, which is the closing price at the price that I bought, you will make a nice 0.5. If you can wait further, all right, you can actually put here. But normally, if I'm trading manually, when I trade manually, what I do is the moment I see, all right, I see that it's around here, all right, what I do is I will set a stop loss. All right, I will set a stop loss around somewhere here. All right, somewhere here. You notice the price went back down, right? You notice here. All right, so this became a no risk trade. So I don't care whether the price continue to go up or go down, because I know I'll in profit, because here is where I break even. All right, you can choose to decide to stay in the trade or not stay in the trade, depending on here. But because the super trend is still showing a green, all right, I will continue to wait, and as long as you are patient and you waited, all right, you will see some gains over here. Let's try another pair, another example. All right, so I'm not going to look at the 4-hour thing, but if you want to see the 4-hour, you can look like this. So now obviously it's in the downtrend. All right, right now in this currency pair, I like to trade on this pair myself. So it's a downtrend. So the trend of it going down is very, very high. Okay, so one thing I like about trading this pair, if in case you watch my other video, the percentage gains is really very high and very risky, which is something I'm already so used to. All right, maybe you're not used to it. I don't know. So you're looking for a down. All right, and you're looking not only just any down, but below the EMA line. But unfortunately, as you can see, most of the super trend calls are all above, all right, the EMA call. Okay, but should you follow strictly on the sell? I mean, it's up to you what you prefer. I will say sometimes I use this, sometimes I don't use this, depend on your personal risk and what you prefer. Okay, but normally I do not care. Why? Because I'm willing to DCA. So I've been trading on this pair for quite some time. So I know on average normally my DCA for this is normally about 1 to 2% as well. How do you know how much the DCA is? Depending on your history, you look at the price range. So if you notice the range normally is range like this is like 3%. All right, and then you notice this one, the range is from around 5%. So you can, if you scroll back the history, you roughly can guess the range is 7%. So it's about maybe 3 to 5%. So I can safely say if I DCA around 4% would be pretty safe. All right. So but how do you know when is the bottom? No one will know when the bottom is. No one really know. So for example, if I traded this, I started over here again. Normally my standard, I will draw the trend line again. So I'll draw a simple trend line, all right, to tell me when it will break off. So obviously I'm looking for it to break off over here. But when should I go enter the trade? All right. So the problem is some people will depend on the super trend, which is over here because it's below. Maybe you enter here. Actually, personally, I will not enter here because I'm not sure because it didn't go below the EMA line. But normally I will adjust because I didn't adjust my super trend line here. I will adjust the setting. If you adjust the settings, all right, sometimes you'll be able to get more accurate calls as well. So if you adjust, all right, sometimes you get better calls, all right, based on what you adjust over here. Depending on your personal style, okay? So let's say if you did a trade over here, just like the previous example, we started the trade here as short, okay? The order was here, it's a long order, okay? Let me just change the color. So you want this to be going up, not going down, but unfortunately it went down. So what happened here, you're going to DCA. So let's say you're going to DCA, let's say if I still choose my 2%, all right, that's one thing problem if you don't set a rule for your DCA. So let's say if I set 2%, you will notice it did not hit, all right, my DCA. All right, it did not hit my DCA, so you will not do the second order. All right, so basically you just need to wait until the price, all right, go up. All right, if maybe you choose to DCA here, if you choose to DCA here, you think that it's quite close to my 2%, all right, your new average position will be somewhere, all right, here instead, in the middle here. All right, I'm going to choose in yellow. All right, so your level will be your new average position, and you notice you'll be able to exit your trade around here. All right, and the time frame from here to here is 50 minutes. From here to here took 1 hour and 30 minutes. So within a span of 3 hours of waiting, all right, on this trade, all right, you would be able to make some money based on what I just shared with you called DCA. Okay, so that's why I normally practice using DC. I don't use stop loss. All right, most people, what they tell you is that they, by the time they trade here, you go down, you lose, you close the trade, you know, at 1%, you take that 1% loss, and then you wait for the next signal to trade. I personally don't like that style, so I prefer to DC. I prefer this style because it takes away the stress of you making the wrong calls to enter the trade. Because most of us sometimes, honestly speaking, out of 10, maybe 5 or 6, we will make mistakes. All right, or we make the wrong call. Instead of a short, we took a long position and start going down. All right, like crazy. Okay, so when it start going down like crazy, we will panic and say, oh no, I think I'm going to do a stop loss. I'm going to take the loss and wait for the next signal. That's what I used to do. Nowadays what I used to do is that I will do a DCA, and I do not put 100% of my trade into one single trade. And by doing so, actually, you realize you will have better wins, overall better win rates in this way. And I noticed, because I do bot trading as well, I noticed a lot of bots also use DCA to get 100% right win rates. All right, and then I just realized, hey, actually that's a very good strategy to try. All right, of course the risk is that basically you use more money to buy down the trade. All right, so that's something I want to share with you in this video about how useful DCA is, how you can use it. So it's the same thing as grid. In grid bot, right? Actually in grid, those who use exchanges, in grid, right, what you do when you do a long position, the grid bot, all right, can actually set, all right, multiple long positions. So it will look something like this, right, on the grid board. So every certain percent you will buy here, buy here, buy here in small amounts. All right, and then we are just waiting for the price to go up. Then you will sell, 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 sell. All right, that's where you make money. All right, that's how grid trading actually works on exchanges. All right, so normally that takes time. The problem with DCA, in case you need to know, all right, there's one bad thing about the DCA. Sometimes the price can go so down, you're not able to close the position. All right, for example, let's find one example. Let's say we are very unlucky, we go and do a long position over here. All right, you do a long position over here. Right, you thinking the price will go up instead of going down. All right, let's say maybe we do here lah, or maybe around here lah. Okay, then you say, oh no, it's going to go down. My Alvin say do DCA. Okay, so it really went down. So if it went down, let's say 2% is here. Okay, so we went down. All right, this happens to me also, not just sharing you my experience, right, what I go through also. All right, so you're going to do your first, I'm going to draw a line here. So my first order is here. My second order is here. Then we wait. We hope you go. Oh no, it didn't go up. It went down some more. All right. It went even further down. All right. And from here to here, it actually is already 6 hours. You can see here 6 hours. All right. So you have the choice to make. Do you want to take a loss, or do you want to DCA again? Okay. So some people will DCA like me. All right. What I used to do is I sometimes will DCA once. I don't mind. I will just buy more. All right, then you buy the third time, all right, which is over here. All right, what happens sometimes the third time, all right, when the third time comes, doesn't mean your average trade is your actual average trade will not be around here. It will most likely will be around maybe this position where I pointing. All right, around there. I don't know how to calculate the average position, but you can see it on your trading platform. Okay, so you're hoping that the price will cross the yellow line, but instead of going up, it continue to go down. All right, it's gonna go side. Now it's going sideways, and then it go down some more. You see here, it go down another time. All right, so sometimes you have to make a choice. Do you want to take the loss, or do you want to take the profit? Because it seems like a long time to reach the yellow line. All right, so you notice if you scroll further, right, it's not really going in your favor, and it took how long? It took from here. All right, only around here. So from here to here, from the very beginning all the way here, all right, it took 1 day and 30 minutes for it to be in profit. So yes, that's one thing bad about DCA is whether you are able to tolerate the loss and wait for it to break up, all right, and have the patience. All right, so obviously the bigger your DCA, the higher your chances that the price will break up to where you want it to be. Right, then another problem you will face later on when you do this manually, right, is that when you see this, okay, let's say imagine you see now on this chart, you see that it cross, all right, and then you have a gain of, let's say, 5%. All right, do you decide to close or not to close? You waited one whole day, all right, for it to appear here. All right, sometimes that's because you want to clear the DCA, you sell too early. And it happened to me many times. And take note, this is not a $30 trade. Now this is actually a $90 trade. All right, a $90 trade. So any chances that it continue to go down, you lose money. So sometimes what happened to me, my mistake was that sometimes I will close too early because I was a bit nervous and thinking I better close it before the price start to go down again. But as we know, you scroll further down, hey, it's actually going up. Right, until here, but no, who will know it will stop here? No one will know. In fact, if you scroll down further to the right, you notice it start to go down very close to our yellow line again. So pros and cons of DCA, you need to be patient, all right, and wait for the price to go up as you continue to buy more as it goes down. But because you plan properly already in advance that your budget is, let's say, $100, you're going to do it only 3 times. All right, other cases after 3 times, all right, you're not able to recover. Yes, it is possible the DCA, all right, 3-4 times the price did not recover. In fact, maybe you make a big loss. All right, that is also possible. So what you can do to avoid that is ultimately you have to take a stop loss, all right, after 3 DCA. My personal practice, what I'm doing now is I will DCA 3 times, okay, and I will do a stop loss, all right, only after 3 DCA. All right, that's my personal manual trading style lah. All right, so it's up to you. But normally for me personally, I never hit the 3rd time most of the time. I only hit like maybe 2 or 1 time most of the time. 3 is very rare. All right, depend on the trend you do, and yeah. So I hope you find this video useful. I thought I want to share this because a lot of YouTubers don't explain that. It's easy to explain, oh, you need to trade here, buy here, go up, yeah, but they never remember that this is on a 1 minute time frame or is in an hourly time frame where you need to wait for the right time to enter and exit. Okay, so I hope you find this tutorial useful. If you do consider to subscribe to our YouTube channel and also join our free Telegram chat. All right, I will see you there. All right, God bless and see you again.